Today on Crypto Win Rate, we're doing a futures trading tutorial on xt.com. By the end of this video, you'll understand the basics of futures trading and how to use the platform with more confidence. If you want to claim a USDT welcome bonus, I recommend you create an XT account with the link in the description. New users registering with our link will be eligible to receive these exclusive welcome bonuses. Now, to start our tutorial, we need to make sure that we have funds in the right account. So let's head to the top of this page and under Wallet, go to Overview. We can see we have about 200 USDT in our account, but we want to make sure it's in our futures account. So let's click on this and we can see the funds are not in our futures account. When you deposit funds into xt.com, you can either deposit them into your futures or spot account. So that means I mistakenly deposited my funds in my spot account, as we can see the 200 USDT. So we just want to transfer this from spot to USDT futures. Make sure we are transferring the full amount and click OK. Now heading back to our futures account, we can now see that we have our 200 USDT. If you aren't sure how to deposit crypto into xt.com, we have previously made a video on this, so I'll go ahead and leave a link to it in this video's description. Our next thing we want to do is understand the futures trading fees on XT. So let's head to the top left, click on this X right here. This will take us back to the home page. We can then scroll all the way down to the bottom. Once at the bottom, under support, we can click on fees. We can see under current fee rate in derivatives trading that the maker fee is 0.02% and the taker fee is 0.06%. Exchanges usually charge two types of trading fees, the maker and taker fee. Maker fees apply when you place a limit order, while taker fees apply when you execute a market order. These are the base trading fees on XT. We can see under that though, it says next level. If we scroll down a little bit, make sure we are under futures, we can see that you have the ability to level up, and with an increased level, your maker and taker fees can reduce as well. To do this, it depends on your current account assets, your 30-day futures trading volume, and your 30-day average account assets. So pretty much the more you trade, the lower your fees will eventually become. Next, let's go to the top, and under futures, we can see there are two different futures, USDT futures and Coin M futures. USDT M futures means your trade is priced and settled in USDT. So if you're trading something like Bitcoin futures, your margin, profit, and loss are all shown in USDT. This makes it much easier to understand how much money you are using and how much you are making or losing. Coin M futures are a little different because they're settled in the actual crypto asset like Bitcoin or Ethereum. For beginners, I recommend starting with USDT M futures because it's simpler, easier to track, and everything is shown in a dollar-based value. Now, when we hover over USDT futures, we can see there are two options, USDT M perpetual and USDT M delivery. USDT M perpetual futures have no expiry date, which means you can hold the position for as long as you want you have enough margin and don't get liquidated. While USDT M delivery futures are different because they have a set expiry date. Usually quarterly, that means the contract ends on a specific date and gets settled automatically. For this tutorial, we are using USDT M perpetuals because it's the most common type of futures contract, it's easier to understand, and you don't have to worry about the contract expiring. So let's click on USDT M perpetual. This is the xt.com futures trading dashboard. On the top left is where we can choose our token. For this tutorial, we're going to use Bitcoin. But xt.com also has many other futures markets you can choose from, including major coins like Ethereum and other altcoins. As a beginner, it's usually best to start with larger, more liquid assets like Bitcoin or Ethereum because they tend to have tighter spreads and more trading volume. On the top, we have this bar right here. We can see something that says index and mark. This stands for index price and mark price. The index price is the average price of Bitcoin across multiple major exchanges. So instead of only using XT's price, it looks at prices from different markets to get a more overall accurate price. The mark price is the price XT uses to calculate things like unrealized profit and loss, and most importantly, your liquidation price. The reason exchanges use mark price is to help protect traders from sudden price spikes or wicks on one exchange. So to keep it simple, index price shows the broader market price, while mark price is the safer calculated price used for liquidations and P&L. To the right of this, we have something called the funding rate / countdown. The funding rate is a small fee paid between traders to keep the futures price close to the spot price. If the rate is positive, long positions pay shorts, and if it's negative, shorts pay longs. So right now we can see that the rate is slightly positive, so longs will be paying shorts. The countdown shows you when the next funding payment happens. Most exchanges use 8-hour blocks. If you're holding a position when the timer hits 0, you'll either pay or receive the funding fee depending on if the rate is negative or positive. Next, we're going to quickly go over the TradingView chart. Most centralized exchanges have the TradingView software built in. At the top of the chart, you can change the time frame. For example, shorter time frames like 5 minutes or 1 minute can show short-term price movement, while longer time frames like the hourly, 4-hour, or daily can give you a bigger picture of the trend. We're going to leave the chart on the hourly for the rest of the tutorial. To the right of the time frame, you can change the type of chart. Most traders use candlestick charts, but you can also switch it to other styles like bars or lines. Again, most traders do use candles, so we are going to stick with candles. On the side of the chart, you'll find your drawing tools. These let you mark important areas on the chart, like support and resistance levels, trend lines, or zones where price has reacted before. You can also add technical indicators, which are tools that help traders analyze the market. Some popular beginner indicators are moving averages, which help show the trend, RSI, which can help show if something may be overbought or oversold, and the MACD, which is used to look at momentum. In chart settings, you can customize how the chart looks. For example, you can change the candle colors, the body, borders, and wicks, adjust the scale, or change the background to make the chart easier to read. And at the bottom, you'll usually see trading volume. Volume shows you how much of an asset is being traded during that time period. Higher volume, like this red wick here, means that there is usually higher activity in the market, while lower volume means there is less activity. So overall, the chart helps you understand price movement, spot trends, and make better trading decisions before entering a position. Next, let's quickly go over a few other tools that you'll see around the chart. First, on the top right of the chart, you'll see this notification button. This lets you create a price alert for the token you are trading. For example, you can set an alert if Bitcoin reaches a certain price, and XT can notify you through a pop-up or push notification. Beside this, we have the multiple chart option. You can compare two different tokens like Bitcoin and Ethereum to see how they're moving compared to each other, or you could look at the same token on different time frames, like Bitcoin on the left on the 15-minute chart, and on the right, Bitcoin on the 4-hour chart. This is useful because it helps you see both the short-term price action and the bigger overall trend at the same time. For beginners, you don't need to use this right away, but it can be helpful once you start getting more comfortable with reading charts. We're going to just keep it on one chart for this tutorial and stick to the hourly. Right beside the chart, we have the Info tab. This section gives you more information about the assets you're trading, like basic details, market data, and other important stats. It can be useful if you want a quick overview of the token before placing a trade. Lastly, on the top right, beside the Notification tab, we have the AI tab. This will give you an AI-style market analysis for the token, including things like recent price movement, bullish or bearish factors, and overall market sentiment. Just to the right of the chart, we have the order book. The order book shows all the current buy and sell orders on the exchange. The green represents buy orders, while the red represents sell orders. The order book can help traders see supply and demand at different price levels, while also giving a sense of the asset's liquidity, meaning how much buying and selling interest there is at each price. Beside the order book, we have the Trades tab. This section shows all the trades that are happening in real time. You can see the price, the amount, and the time of each trade. This helps you quickly see where people are buying and selling right now, and how active the market is. On the top right of the dashboard, we have the Settings tab. Here's where we can choose the theme of our dashboard. Right now we're on dark. We could switch it to light if you prefer that, but I prefer dark, so we're just going to keep it like that for this tutorial. You can adjust notification settings, which control how XT alerts you about things like price alerts, orders, or account updates. And then we have leverage mode. In simple mode, the same leverage and margin are used for both long and short positions. This is usually easier for beginners because everything stays consistent. In advanced mode, you can use different leverage and margin settings for your long and short positions. This gives you more control, but it can also be a bit more confusing. So for beginners, I'd usually recommend keeping it on simple mode until you're more comfortable with how futures trading works. So we're going to keep it on simple mode. Next, we're going to go over margin settings and leverage settings. So we see something that says cross. We can click on this. This is margin mode. Margin mode basically controls how much of your futures account balance is connected to the trade. Cross margin means your available futures balance can be used to help keep the trade open. This gives the trade more room, but it also means more of your balance could be at risk if the trade goes badly. Isolated margin means only the amount of the margin you put into that specific position is at risk. For beginners, I usually recommend using isolated margin because it helps you control your risk better and keep each trade separate. So we are going to confirm our isolated margin. Next, we have leverage. Leverage can let you open a larger position with a smaller amount of money. For example, using 20x leverage means your position is 20 times larger than the margin you put in. But the higher the leverage, the higher the risk. Even a small price move against you can cause a big loss or liquidation. For beginners, it's best to keep leverage low, around 2x to 5x. You don't need high leverage to learn how futures trading works, and lower leverage gives you more room for the trade to move. So for this tutorial, we are going to trade with 3x leverage, and then we're going to confirm it. Now that we have our trade settings set up, we can go through all the different order types. First, we have a market order. A market order buys or sells instantly at the best available price. This is the easiest order type for beginners because it executes right away, but the final price can be slightly different if the market is moving quickly. A limit order lets you choose the exact price you want to buy or sell at. The order will only fill if the market reaches your selected price. You may also see a BBO option, which stands for Best Bid and Offer. This helps place your order around the best available buy or sell price in the order book. To the right of Market and Limit, we have 4 other orders under Trigger. We first have a Trigger order. A Trigger order lets you set a price that activates your order later. Once the trigger price is reached, XT.com will place either a market or a limit order, depending on what you choose. Traders use this to plan entries or exits ahead of time. The next order is a trailing stop order. A trailing stop order follows the price as it moves in your favor, and then triggers if the price pulls back by a set amount or percentage. This can help protect profits while still giving the trade room to keep moving. The next order is a post-only order. A post-only order makes sure your limit orders only add liquidity to the order book. If the order would execute immediately, it gets canceled. Traders use this when they want to avoid taking liquidity and potentially pay lower maker fees. And finally, we have the scale order. A scale order lets you split one larger order into multiple smaller orders across a price range. For example, instead of buying Bitcoin all at one price, you can set a lower price and an upper price, choose the number of orders, the size of your order, and then XT will spread those orders across the range. You can also choose how the size of your order is distributed. There is flat, ascending, and descending. Flat keeps each order the same size. Ascending makes the orders get bigger as the price moves through the range, and descending makes them get smaller. This is more of an advanced type of order, but it can be useful for traders who want to build into a position slowly instead of entering all at once. Now, if we are using limit orders, we can see at the bottom, there is something called TIF. This stands for time in force. This controls how long your limit order can stay active. GTC, or good till canceled, means your order will stay open until it gets filled or until you manually cancel it. IOC, or immediate or cancel, means the order will try to fill right away, but any part that can't be filled immediately gets canceled. FOK, or fill or kill, means the full order must be filled immediately or the entire order gets canceled. For beginners, GTC is usually the easiest to understand because your order simply stays open until it fills or you cancel it. For this tutorial, we're going to be using a market order because it will execute instantly and we won't have to wait for the order to fill. Next, before we do make our order, we can see under size, it says BTC. If we click on this, this will take us to unit settings. On XT, you'll see 2 main options. You have order by quantity and order by cost. With order by quantity, you're choosing the size of the position itself, and this takes your leverage into account. If you choose BTC, you're entering the exact amount of Bitcoin you want your position size to be. If you choose USDT, you're entering the total position value in USDT, including leverage. So if you entered a 300 USDT position using 3x leverage, you would be using 100 USDT of your margin. If you choose contracts, you're sizing the trade based on the number of futures contracts. This option can be a bit more complicated and more confusing for beginners. We then have order by cost USDT. This lets you enter how much of your own margin you want to use for the trade in USDT. For beginners, I recommend using order by cost because it's the easiest way to control your risk. You can simply decide how much USDT of your own funds you want to put into the trade without worrying about calculating BTC amounts, total position value, or contract size. So we are going to confirm these unit settings. For this tutorial, we're going to be executing a 3x market long on Bitcoin with our full account balance. So about 200 USDT. Before we click open long, we can see there is a box that says TP and SL. This stands for take profit and stop loss. A take profit is the price where you want to automatically close the trade in profit. So if Bitcoin moves up to your target, XD can close the position for you and lock in the gain. A stop loss is the price where you want to automatically close the trade if the market moves against you. This helps you limit your loss instead of letting the trade keep going in the wrong direction. This is really important for beginner traders because it helps you manage risk before entering the trade. Instead of guessing what to do while the price is moving, you already have a plan. You know where you want to take profit, and you know where you want to cut the trade if it doesn't work out. So I'm going to place our take profit price around 130,000. This will mean again that once Bitcoin hits this price, we'll be fully sold out of our position and we will take our profits. On the downside, I'm going to set our stop loss at around 55,000. If Bitcoin reaches this price, again, we will be fully sold out of our position and we will take our losses. This is the simple way to set a take profit and stop loss. We also see an advanced option. So if we click on this, it will take us to this page here. The first thing we can see are these limit order boxes. This is giving you the option to execute a take profit and stop loss as a market order or a limit order. Using a market order means once your take profit or stop loss price is triggered, XT will close the position instantly at the best available price. This is usually the simplest option and is often better for beginners, especially for stop losses because the main goal is to get out of the trade quickly. Using a limit order means once the trigger price is reached, XT will place a limit order at the price you choose. So if we would click limit order, it will give us another price to choose. This gives us more control over the exact price, but there is a risk the order may not fill if the market moves too quickly. So we're going to stick to market orders for our take profit and stop loss. Next, we're able to choose what price type triggers the order. We have last price, mark price, and index price. Last price is the most recent traded price on XT. It moves quickly and shows what the market is trading at right now. And then as we previously stated earlier in the video, mark price is a more stable calculated price that exchanges use to help prevent unfair liquidations from quick wicks or sudden spikes, while index price is based on the average price of the asset across multiple major exchanges, so it represents the broader market price. For beginners, mark price is usually a good choice for stop losses because it's more stable and less likely to trigger from one quick wick. For take profit, some traders use last price because it reacts faster, but mark price can also keep things more consistent. So mark price is the default option on XT, and we are going to keep our take profit and stop losses both at mark price. Now you'll also see different ways to set your take profit and stop loss. The first way is the simplest way in my opinion, which is to just put in the price you want to exit the trade at. The next way we can set our take profit or stop loss is by ROI percentage. This means you set your take profit or stop loss based on the percentage return on your margin. Just remember, with leverage, ROI can move a lot faster. So on 3x leverage, a smaller move in the Bitcoin price can create a larger percentage move on your position. So if I have an ROI percentage in mind, let's say I'm happy with 150% gain. This would put Bitcoin around 119,000 and we'd be up about 285 USDT on our trade. The third way is to set it by P&L. This means profit and loss. This lets you choose how much money you want to make or how much money you're willing to lose on the trade. So if you have an idea of how much money you want to make on this trade, let's say you'll be happy with $200 in profit. This is the price of Bitcoin where you would exit your position. And on the downside, if you have an idea how much you want to lose, let's say you don't want to lose more than 50 USDT. Again, this is where Bitcoin's price would be at. And the last way to set your take profit or stop loss is by price change. This would be the price change of the asset. So let's say I want to exit my trade once Bitcoin goes up 50%. And we can see the price Bitcoin would be at. And on the downside, I want to exit my trade if Bitcoin goes down more than 25% and just cut my losses. These are all the different ways that you can set your take profit and stop loss. We are just going to keep it simple and keep our take profit and stop loss like we had it before. and we are going to open a long on our position. We can quickly go over the details of our order, make sure everything is correct, and then we can confirm. We can see that our order was successful. And now under positions is where we can manage our open order. Here we can see the size of our position. This shows the total value of our trade. This is the average entry price of our position. Our break-even price. This is the price where our trade would roughly break even after trading fees are included. Next, we have a margin. This shows how much of our own funds are being used for the position. And beside it, we have a plus sign. We could actually click that and we can adjust our margin. We can add more margin if we wanted to increase our position size, or if we wanted to decrease our position size, we can use remove. In the middle here, we have estimated liquidation price. This is one of the most important numbers to pay attention to. This is the price where your position could be liquidated if the market moves too far against you. You'll also see a margin ratio. This helps show you how close we are to liquidation. The higher this gets, the more risk our position is under. Then we have P&L and ROI. Right here shows your profit or loss on the trade. We can see we are in the red, so we are a bit down. The P&L shows the dollar amount, while the ROI shows the percentage return based on your margin. If we scroll our cursor to the left a bit, it will give us a couple more options. Here it gives us an option to close our position. XT also gives you an option to reverse your position. This means if you're currently in a long trade, it can close the long and open a short instead. This is a bit more advanced, so beginners should be careful using it. On the far right, we can see our take profit and stop loss. If we click on this icon, this is where we can edit our take profit and stop loss or cancel it. We can also manage our take profit and stop loss orders under open orders. Here again, we could edit the order under modify, and we can cancel the order if we click revoke. And we can see our TP and SL order has been withdrawn. Now I showed you how to add a take profit and stop loss order before your trade. Next, I'm going to show you how to add one after. There are multiple ways on XT to add a take profit and stop loss after your trade. We can actually do it right on the chart. So to make it easier, we can move the chart to the daily, and then we can just drag our stop loss to our preferred price. So let's say 60,000, or we could drag our take profit to our preferred price. So that's one way to do it. We can also go to our position, move to the right a bit, and under position, take profit and stop loss, we can click the plus sign, and we can just repeat what we did before. So we can set our take profit price around 130,000 and our stop loss price around 55,000. And we can confirm these orders. We can see our take profit and stop loss here. If we click this icon, again, we can modify our order or cancel it. Next, I'm going to show you how to add multiple/partial take profit and stop losses to your position. So we can click exit here, and under TP and SL, we can click on the plus sign, and we can see now we are in partial positions. Setting a partial position on a take profit and stop loss means instead of closing your entire position at one price, you can close only part of the trade. For example, if you're in a Bitcoin long position, you might take profit on 50% of the trade at your first target and leave the other 50% open in case Bitcoin keeps moving higher. Partial stop losses can also be useful because they let you reduce your position if the trade starts moving against you instead of closing everything all at once. So overall, partial orders give traders more flexibility and help them manage risk in stages instead of making one all or nothing decision. So for this tutorial, we are going to create two separate take profit and stop loss partial orders. We're going to create one order for 50% of our position, and then our second order will close our full position. So for our first partial position, I want to take some profits if Bitcoin hits 120,000, and I want to cut some losses if Bitcoin goes down to 70,000. Now we just need to scroll down a bit, and we can see we can choose how much of our position we want to include. So we are going to do 50%, and we are going to confirm this order. So now we have our first partial take profit and stop loss position. For our second one, we can click on this icon here, click add, and we are going to add our second take profit and stop loss position. For this order, we're going to give it a lot more room. So we're going to set our take profit at around 180,000. This will mean if Bitcoin hits this price, we will be fully sold out of our position. On the downside, we're going to give it some more room as well, because if Bitcoin does go down, we still want to give it some price room to recover. Again, if Bitcoin does go past 40,000 though, we will be fully sold out of our position. And now at the bottom, we are choosing 50% again, which is the second half of our position. We can confirm this order, and now we can see both of our take profit and stop loss orders. If you wanted to cancel them, you can cancel them individually, or you can just click on cancel all. Now the last order I'm going to show you is the trailing stop order. To add a trailing stop order to our existing position, we can head down to take profit and stop loss and click on trailing TP and SL. As we briefly explained before, a trailing stop loss is a type of stop loss that automatically moves with the price as it goes in your favor. This can help you lock in profits while still giving the trade room to grow. There are two main settings, the activation price and the callback rate. The activation price is the level where the trailing stop loss becomes active, so the trade won't start trailing until price reaches this point. The callback rate is the percentage the price needs to move against you before the trade is closed. For example, if we set a 2% callback rate, our position will close if the price drops 2% from its highest point after activation. A trailing stop loss can be a great tool for protecting profits without having to manually adjust your stop loss. So when setting an activation price, we can keep it on market. That means that our activation price would be the current market price, or we can press limit price, and that would give us an option on when we want to put our activation price. So I'm going to keep it on limit price, and I'm going to choose our activation price around 100,000. And for the callback rate percentage, I'm going to put it at 10%. This means that the trailing stop loss we've set will only become active after Bitcoin reaches 100,000. After that, if Bitcoin keeps moving higher, the trailing stop loss follows the price up. But if Bitcoin pulls back by 10% from its highest point after activation, the order will trigger and the trade will close. For the size, we are going to place this order on our full position and we're going to confirm. If we want to see our trailing stop order, we can head to Open Orders, Trailing TP and SL, and here we can see our trailing stop order. Scrolling to the right, here is where we can modify the order or cancel it. To close our full position, we have a couple options. We can close it from the order panel. We can close it from the chart by just clicking on this X right here, or under position, we can close. If we had multiple positions, we could also use the close all positions option. We are just going to click close, and we're going to close our full position with a market order. Go over our details and then confirm. We have successfully closed our order. We can see in our available balance, we have about 201 USDT. We started with 200, so we did make a little bit of a profit. That about wraps up today's futures trading tutorial on xt.com. Hopefully this helped make the platform easier to understand and gave you a clear idea of how to place and manage a futures trade. If you want to claim a USDT welcome bonus when signing up to xt.com, you should create an account with the link below this video. The link will take you to this sign up page where you can see all the bonuses that you are eligible for. If you like this video, feel free to give it a thumbs up and subscribe to the channel. We also have a website at cryptowinrate.com where we have lots of crypto content and tons of educational guides for you to sift through. Thanks for watching and bye for now.